Hi, this is Sage. Welcome to the Economic Corner show, where we update you on all the biggest global economic announcements. So let us get started with today's big news. And the first up on the Economic Corner show is an update on Israel's throne. There are reports of possibilities of the end of Benjamin Netanyahu's 12-year reign as Prime Minister of the Jewish state. Israel's opposition leaders have agreed to form a government which would end Netanyahu's era. The coalition from the far left Meretz party to the ultranationalist Yamina, anchored by centrists Yesh Atid, hammered out a deal on Wednesday after days of frantic negotiations. The Change government will be supported by Ra'am, an Islamist party that is playing the role of a tiebreaker after 4 elections in 2 years failed to deliver a clear result. It is only the second time in Israeli history that an Arab party will play a role in a Zionist government, and the first time one has officially joined a coalition. This grouping has occurred with a single common goal: the removal of Netanyahu. And Netanyahu is Israel's longest-serving Prime Minister, who is currently on trial for corruption. Let's move on to the next news. The UK and Australia hold further talks in a bid to strike trade deals within weeks. The British envoy said that Britain and Australia held another round of talks to progress a free trade deal, as both countries seek to strike an agreement in mid-June. Britain is pursuing a deal with Australia as one of the pillars of its post-Brexit strategy to build stronger commercial and diplomatic links in the Indo-Pacific region. And both countries in June said they have agreed on the vast majority of issues for a deal, which officials estimates say could add $708.4 million to British economic output over the long term. But with some sticking points remaining, the British Trade Minister, Liz Truss, and her Australian counterpart, Dan Tehan, held talks late on Thursday. The proposed deal with Australia is the most advanced of several deals being pursued by London, and Japan's economy minister said that member nations of the Comprehensive and Progressive Agreement for Trans-Pacific Partnerships agreed to allow Britain to start the process of joining the pact. Moving on to the major economic updates coming in from the United States now. The US has threatened to impose tariffs on $2 billion worth of goods from the UK and 5 other countries. The threat comes in as the countries argue about how to tax technology companies. The move points towards reigniting the transatlantic trade wars unless parties resolve talks over a broader international tax agreement. The Office of the US Trade Representative said it was imposing but immediately suspending the tariffs on Austria, India, Italy, Spain, Turkey and the UK. The US said that it has wrapped up a series of investigations over the way the countries tax the US tech giants. And the announcement comes as the wealthy countries are locked in intense negotiations to hammer out an update to the international tax regime. The Biden administration has proposed giving advanced economies powers to raise corporate tax from the US tech companies and other large multinationals while instituting a global minimum corporate tax. And before I share more of the important news, it's time for a small break, but please don't go anywhere. We'll be right back. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Hello, welcome back. This is Sage and you are watching the Economic Corner. Next up are the important economic data announcements coming in from China. China's General Services PMI data. The May data pointed to another strong performance of China's service sector, and business activity and new orders both rose sharply despite rates of expansion softening since April, while firms continued to add to their staffing levels. However, the latest survey also showed a sharp and accelerated rise in input costs, which in turn led to a steeper increase in prices charged, and business expectations for the year ahead remained strongly positive in May, though the overall degree of optimism edged down to a 4-month low. At 55.1 in May, the headline seasonally adjusted business activity index slipped from April's 4-month high of 56.3, but remained firmly above the neutral 50.0 level to signal a marked increase in activity. The latest upturn in output also extended the current sequence of rising activity to 13 months, and higher levels of business activity were supported by a sustained increase in sales. In line with the trend for activity, the rate of growth was not as quick as that seen in April. Well, according to panel members, customer demand continued to recover due to the successful containment of COVID-19 in China, while there were also reports of new product offerings boosting sales. However, the resurgence of the virus in other regions across the world weighed on new export business, which fell for the third time in 4 months. Employment across China's service sector rose for the third consecutive month, with a number of firms adding to their payrolls due to rising sales. And that said, the rate of job creation softened slightly since the previous month. The 12-month outlook for service sector activity remained strongly positive midway through the second quarter, with optimism often linked to expectations of firmer client demand both at home and abroad, and new product releases. However, there were concerns over how long the global economy will take to recover from the pandemic, which led the overall degree of positive sentiment to dip to a 4-month low. Let's move on now to the next big update coming in on the ANZ Commodity Price Index. The ANZ World Commodity Price Index lifted 1.3% month on month in May, which is its 8th consecutive lift, and prices for all major categories of commodities lifted, pushing the index to a record level. In the local currency terms, the index gained 1.0% month on month as stronger commodity prices were partially offset by the trade-weighted index, firming 0.6%. Global shipping costs for containers are starting to stabilise at elevated levels, but shipping delays are expected to linger for at least the remainder of the year. The Baltic Dry Index peaked in early May at its highest level in the past decade, but is now showing signs of retreating. And before we share with you more of the important news, it's time for another small break. I'll be right back.
New Zealand is unique, and Kalkine TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at Kalkine TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit kalkine.co.nz.
Hello, welcome back. It's Sage and this is the Economic Corner. Thanks for joining us. And we were discussing the ANZ Commodity Price Index before we took that short break. Exporting to Asia is easier than further afield, hence a larger portion of goods is now moving in this direction, and dairy prices lifted just 0.2% in May as stronger prices for skim milk powder, butter and cheese were largely offset by weaker prices for the whole milk powder. The meat and fibre index lifted 1.4% in May, but is poised to lift further in the coming months as vaccination rates lift, allowing for more dining out in Europe and the US. The horticulture index lifted 1.7% as prices lift for new season apples. The lift in price will not be sufficient to offset the massive loss of volume as fruit was left unpicked due to the labour shortage. The Forestry Index gained another 3.3% in May to extend the record prices this sector is achieving. Aluminium prices continue to rapidly appreciate, gaining a further 5.6% in May, and aluminium is now worth 65% more than the year-ago period. And the global demand for aluminium is forecast to lift 8% this year, which is expected to erode stocks and force some buyers to use lower-grade aluminium. Moving on now to the next news. Australia's trade surplus widened in April, and international trade in goods and services for Australia revealed that the seasonally adjusted balance on goods and services surplus increased The goods and services surplus increased $2,234 million to $8,028 million in April. And goods and services credits that it exports rose 3% to $39,772 million, while the goods and services debits or imports fell 3% to $31,743 million. For retail trade numbers, the April 2021 seasonally adjusted estimate rose 1.1% month on month, and this is unchanged from the preliminary retail trade release, which rose 25.0% compared with April 2020. The trade position improved on higher exports and lower imports, and with that mix, as expected, the fall in imports represents a temporary dip after strong back-to-back gains, 4.7% and 4.5% for February and March. The underlying trend is one of goods imports recovery as the economy reopens and domestic demand expands. And before I share more important news, it's time for another small break. I'll be right back after this. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Property by Kalkine. Looking for a dream home?
Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Hi, this is Sage, and you are watching the Economic Corner live from the Sydney studio at Kalkine TV. Let's look at the last news in the Economic Corner today. And the announcement comes in from the Australian Prime Minister. Prime Minister Scott Morrison announced a new temporary COVID-19 disaster payment for people who live in declared COVID-19 hotspots and are unable to work because of a lockdown. The PM Morrison said that the plan could be used to support major cities like Melbourne. A new temporary COVID disaster payment will be a weekly payment of $500 for people who work more than 20 hours per week, or $325 for those working less than 20 hours a week. People older than 17 years who are permanent residents or workers on visas will be eligible. They must live or work in the area determined as a COVID hotspot and have been working in paid employment before the lockdown. The PM said that the costs for this new plan should be shared 50-50 with the state and territories, or alternatively, state governments could fund business support and the federal government pay for household support. Treasurer Josh Frydenberg has confirmed the cost of the new emergency payments. He says for every 100,000 people receiving support, the cost will be about $50 million per week. And Mr. Frydenberg stressed that it is a demand-driven program. Thanks so much for joining us on that fairly data-heavy report in the Economic Corner for today. Please stay tuned. I will be back with more of the live updates on the markets, diverse themes and sectors, as well as the economy. Sage signing off for now.